9/8, 2013, time 10:10 a.m. Pacific Standard Time. What we're going to do is we're going to start covering all of our on weekly charts, the MSI Australia. And we're going to go through Australia, we're going to go through Canada, Sweden, Germany, Hong Kong, Italy, Japan, Belgium, Switzerland, Malaysia, the Netherlands. All of these various worldwide ETFs and emerging markets is that we're going to cover it. We're going to start with Australia on a weekly chart. Once they had made their great bull runs, from $28 down here to $22. It was a $6 reversal. We consolidated here in this particular country on the Australia Weekly. It is an ETF, and where do they come from? They come from right here. We start with Australia, and they're all MSCIs. Okay? And so they're iShares, right? So basically, what we're going to do is that we do trade these in bigger portfolios and whatnot. And when the whole world was printing money, it was a great time to be long the broader emerging markets. So this one's coming back up. It's testing it. I can tell you, though, that the wall of resistance is going to be up here at $26 MMTs. That's Australia. Let's move on to Canada. Here we have Canada on a weekly level. We have the Canadians came back in their bull run up to the highs. They had their 3-week reversals and whatnot. And they're right back up here testing major 200-week resistance moving average level. They're above this red line is the 50-week, and these are all of your other weekly lines. The 10-week is crossing above that 20-week, and it's above the 100-week. So Canada looks pretty well as far as which way it's going. It's buyable down here, and these are positions that are held overnight for a period of time. So they're not something that's done on an intraday level as a market maker level. Let's take a look at Sweden. The MSCI Sweden weekly index. Once again, Sweden hadn't done too bad. They came from 29.50 all the way up here to the very highs that were put in. And then you had your reversals down here. So it's very, very important that people understand that the Sweden is faring fairly well. However, when they pull back or they fell, there are other ETFs called bears that you can buy and we will buy that would take the opposite movement. So so that's what Sweden is doing. Let's go to Germany. Germany had a big, huge weekly reversal. This one started on 8/26, part of that dog days of August. We went straight down. We have a wall of resistance. So let me tell you something. Germany's in a little bit of trouble within their bull, but they do rally up nice. And when you're broad-based purchasing, the leadership around the world, you're diversified outside of the U.S., but we do know with all of it that people started taking money out of the U.S. and moving it over. Let's take a look at Hong Kong. Hong Kong, EWH, Hong Kong. Look at Hong Kong. It came down here and tested $18. It's moved up. But what we really want to know is when this side of the market or this side of the market or the bull side of the market's going, we relate that to the U.S. and many other variable factors. Let's take a look at this Australia. And as soon as we can get the Australia chart, which we have right here, we can clearly see in Australia, of course, you know, they were in such great bull runs before the bear ever had come back. And that particular country, in my view, it has some obstacles and some major challenges in Australia. Remember, they like to hoard up a lot of our natural resources and materials, commodity-based type country in a lot of ways. But nonetheless, we're above the 20-week moving average. That wall of resistance comes in here, MMT, after the 50-day week moving average in Australia. Let's go to Canada again. We know that Canada is up there at resistance. And I just want you to see the differences on the weekly charts in these things. So let's take a look at Italy. Italy had a great rally. at $11.80. So when we buy these are several week moves, but they do give a return on capital. So you get 3 to 5 or 10,000 shares or 20,000 shares, whatever level you're on, you're going to be able to make money in these lower beta worldwide country ETFs. We trade them all the time. It's called diversify. Japan is in trouble. We just like looking at it. There's the weekly iShares. Remember, these are iShares, but it tells us what their countries are doing. That's the most relevancy of this. This one had that weekly reversal in August. You see, there's a correlation to a lot of them. Let's take a look at Belgium. EWK, we already looked at it, but the thing about it is Belgium is also having a problem. Let's take a look at Singapore. Singapore was in a great bull. Remember, these are just the iShares, but it tells us that in the month, in the dog days of August, look at just like the U.S. markets that we said was going to correct. Look how this one corrected. And then take a look at the September weekly movement up, but this one's extremely broken down on this particular iShares with that Singapore. Let's take a look at the UK index fund. This is called the UK index fund. It's weekly iShares, EWU. Now remember, for people that want ETF management, whether it's global management or whether US management, and a mix of bulls and bears and a mix of worldwide countries to put in that portfolio, we do have a yearly placement program for that. You want to inquire and get that type of management, particularly people with IRAs. You're restricted on what you can do, but we can open up the door for you and you can change your processes. Just get with this. One of the things that we can say about this one in the UK, people think that Europe is coming back online. Look at the great bull rallies on the weekly. Now, we're coming up to a major top, but it's quite different than what some of the US ones look like. This one's going to come up and test a major wall of resistance, and it's Mexico is another one that's very important. Mexico, in that iShares, the EWW, this one broke down in all weekly categories. It has a little bit higher beta dollar price movement because the correction is right below $71 down here to, let's say $61. So over a weekly process, there are some great moves both for the short side and the long side, the bull side as well. Keep your eyes on Mexico. I repeat, keep your eyes on Mexico. Take a look at Spain. Okay, this is the Mexico, but let's look at Spain relative to this one. Look at Spain. It had a great rally off of 27.5 up to 33. Once again, ETF, worldwide ETF management, it takes a lot of skills, but we train you through them just like we're doing with our MMTs and our worldwide trader base around the world right now. So it's very important that they understand where different countries are and how bulls work in different countries and how reversals, but how is the broader part of the world all relatively the same? They've all been printing money. So let us not forget that. Let's take a look at Switzerland. Switzerland. Look at that big weekly correction in August. This is the first week of September. They too have great bull rallies, $28 down toward the low. So when you're purchasing, you got to know where to purchase. Then you have to know when to sell. But you want to be diversified. When they're all printing money around the world, let's just say that these certain ones, there are leaderships in the world. U.S. is a leader. There are different other countries that have their leadership in their economic programs and their economic cycles. So it's very important for you to understand where these things are and what they're going to do and why they're going to do it. One of the things that I just wanted to take a look at with you is the Netherlands. Did I do the Netherlands? I don't think so. The Netherlands is up here but look at how they rally on up in these iShares. Look at that. It's a very nice move. You can get very, very diversified in your risk management skills within your IRAs by taking advantage and getting diversified. So one of the things about, once again, look at that France. Came down and tested a major weekly moving average. But look at how the bull rally's been in France. And that we've had these corrections and they kind of follow the U.S. to some degree. So basically what I can say at this very moment is we have covered a few of them for now. There will be other ones that we look at. Some of them, here is once again about this Austria deal. This is Austria, it's called capped, MSCI. It's an EWO. It's different than the one that's earlier in the video. The thing that I want to focus on is that 200-week moving average, but from 1620 as a test of major support level, that's when it's time to buy. So these are the kind of shares, you get 5,000 shares of these things or 3,000, but you're going to make a couple of dollars and you're going to get some yield. Okay, but if you have a multiple diversifier working with broad-based, with everything rallying the same way, you're going to get 10 of these iShares that make you money all at one time because they're following that pattern. That's called the Austria CAPPED capped EWO weekly iShares. All right, so we know what Mexico and Spain looks like. We know what Hong Kong looks like. We know what France looks like. We know what Mexico. Boy, we got to stay on that one. So I'm going to conclude this particular worldwide update as far as these iShares go. And this way, people with IRAs and or people that have a lot of money that they want to put to work or they want to get trading capital from us, you can. So they all rally, but they do have their reversals. They make money. They don't move a lot. You have a lower beta volatility risk, and you can commingle worldwide with U.S. and various other structures and different sectors. And this way you can learn to be your own fund manager or your own money manager. And the way that you will do it is by understanding the math, how the world works, how economies around the world works, how governments around the world work, how their banking systems work, how they're all tied into some kind of similar pattern and mimic off of the U.S. because they do and whatnot. But they all have their individual foreign policies. They have their own risk. And so therefore at times when the world is going down in the tank, you would want the bear ETFs. You would want the opposite of this on all of this. So we will be doing that in a different segment. And we will have all of the emerging markets. And we will find either bear 2x or bear 3x. Please follow forward with all the people in the prop traders group, which is us around the world, all of our worldwide people and U.S. people. So doesn't matter what country, doesn't matter what nationality, doesn't matter who you are. You're all welcome here. And we will do our best to help you get into a broader diversification model. Remember, this is not our market making component. This is not our market making division or our market making division in options. No, this is a different type of management. And this way, it's about people who want to have a lower risk. They want to be able to understand where the charts are. They want to be able to understand where the world is. They want to know how things are correlated or how prices are correlated and how when one goes up, the others follow at various different bull economic cycles or bear economic cycles. Everybody believes that the whole European Union over there is going to come back to life and that their stimuluses would work for a while. But remember, the whole world is on a stimulus program. And the problem moving forward in between 2014 and 17, let's say, is that there's going to be changes in these economic cycles and they're going to run patterns. They're all going to run down with each other when they go, and they're all going to run up with each other when they go. One of the things that you can do is sign up. That's step one. The most important thing that you can do if you're looking at coming here, we have very many setups, a lot of setups. The variance of those are extremely wide, and so the diversification model becomes even wider. So the analyses are here. If you want to be a market maker, you need trading capital. That's another type of interaction with the market. You want what we're doing here with worldwide ETFs, iShares, and various different bulls and bears and components. That's a different management. The biggest one that makes the most money, I'll be very direct and upfront. You get involved in the SMF options exchange. We own our own prices, meaning we have our own price prints within the broader exchanges around the world. And it's our prices, and we have the live videos here. Just go through them. See the truth. These were done during live market hours. And yes, they get dispatched to you from our market making division. If you go back to trading, simply click on the tab. You want to go down to the SMF stock exchange. Yes, SMF has their own exchange prints within the broader various high-low range prints in equity movements, stock movements. We have a live trading room. We will be giving you buying power. So $2,500 if you have, I'll give you 10 to 1 on 5,000, 15 to 1 on 10,000. And people that we know and like, well, that could go up to 20 to 1, depending on who you are and what type of risk. But everything is right here. So take a look and go through here. Do yourself justice. Take the right step today so that you can get a clear picture of how markets are manipulated in short-term movements. So you have a lot to look at. Just get involved. Click on the 1-day exclusive free trial. Let our management teams do the work for you. Click on free trial tab. Get started right here. Click on it. If you go to trading down here, open an account. You click on open an account right here. You will find all your paperwork and all your necessary documents with Viking Capital contractor agreement. And you will go through there, fill them out. When you're in your free 5-day trial, you will get all your answers answered. That's the best way to get answers here, is to go through the 5-day free trial and ask why things are, so that you can see for your own self. So basically, you have everything up here. Options order executions are very, very important. They're called seeking algorithms. These algorithms are very, very important so that you have the upper advantage of other people trading options. These are routed to all the option pits around the world at one time, and it's called liquidity seeking algorithm strategies, advanced options trading strategies. You need to get involved in ultra high frequency trading platform that is used to execute your open orders that you put into the marketplaces at the wholesale prices. Click on HFT, high frequency trading videos. Go through them. Do yourself a favor. Trading platforms. Market maker features. Read the pages of what a market maker has versus what you have. You'll want to be here immediately if you're serious about this at all. Period. At the end of the day, it's all about how orders are routed and how they get to the exchanges. And you need to know the kinds of technologies that are used. This will just give you a little eye opener. If you go over to services and do yourself a bigger favor, click on the HFT trading courses. Why is that? You will click watch this movie. It's called The Ghost Exchange. We help train some of the people that put this together. Stock market funding is in about 6 minutes. We called the capitulation in 2010 before it happened. Yes, we did. And you'll see us in here, and you'll see us in the film credits at the end of the movie as well. We were a big player of teaching the world how high-frequency algorithmic software programs in the broader exchange models are used to artificially stimulate prices in one way or the other, and how volatility has really come today versus any other time in U.S. history.